One of the things that makes One Rental at a Time very unique in this YouTube world is I seek out experts in other areas so that we can all learn together. We have Jonathan today from Convoy Home Loans who's going to help us understand and translate Fed speak. How you doing, Jonathan?
I'm all right. How are you? It's been a while since I've been on.
Yeah. Dustin, your partner, stepped in a couple of times. You guys are moving and grooving there at Convoy. Thank you for being here. But what I want to do in this video, Jonathan, is focus on one part of Jerome Powell's statement and press conference. And I want to have you kind of translate that for the everyday person. You ready?
Let's go.
So one of the things that Jerome Powell said yesterday, and I highlighted for my team and followers about a week ago, is what is going on in the regional banking crisis is actually going to tighten up credit. Jerome Powell went as far as to say yesterday it could be as much as a quarter or a half a point, which means he doesn't have to go as high. He doesn't have to go as fast because what is occurring in the banking sector is leading to tighter credit conditions, which means less lending. That's how I translate it. But I would love for you to kind of break it down for the everyday investor buyer who is coming to you trying to get a loan. What does Jerome Powell saying tighter credit is acting like a rate increase? What does that really mean to the everyday person?
I mean, basically, in layman's term, it just means that borrowing money is going to get harder, right? Mortgages, loan standards, guidelines. So the qualifications are going to get tighter, which already, I mean, on the conventional side, Fannie Mae and Freddie Mac had rolled out, like, if you're over 45 debt to income ratio, they're going to start hitting you on the pricing for it, right? We're probably going to see more of that stuff happen and lending get more and more the guidelines to borrow money to get tighter and tighter, which means that debt to income ratio might become more of a thing. The banks, especially the banks, are going to have a lot stricter underwriting guidelines, which means that it's going to be hard for someone that could get a loan previously that might be on the borderline of debt to income ratio or credit situation to now be able to get a loan. It's going to be nearly impossible with the big banks, especially. So I think that is the biggest kind of effect for the common person is that's going to be very hard. And that's kind of where people, like, I guess brokers would come in, right, on the broker space to really assist and give different options. But the banks are going to it's going to get harder to get a loan from the bank, essentially.
Yeah.
Yeah.
This is kind of visualization as I was hearing you run through that. So if you take out a piece of paper and you put on 100 dots, right, in a very loosened lending environment, most of those folks can get a loan somehow, some way. But as you're tightening the criteria and the box, the circle gets smaller and you're covering less and less of those 100 dots. Is that a fair way to kind of simply paint a picture?
Yeah, absolutely. Because I mean, in a sense, those dots are different people, right? So their
Yeah,
FICO scores, their debt to
exactly.
income ratio, like their experience. So all that stuff that used to be kind of like, oh, if you have like a 580 FICO, you can get an FHA loan and kind of, it like kind of has a circle around
Mhm.
it, but it starts becoming a smaller and smaller circle. FICOs are going to get stricter. DTI is going to get stricter. I think at the banks already, it's like 43 to 45% max, but
Mhm.
they're going to probably get tighter and tighter, and they're probably going to make it so it's harder. Like, for example, like what Fannie Mae and Freddie Mac's doing. If you're over 45% debt to income ratio, they're hitting you. So, or they're going to hit you. So what that means is people that have over a 45% debt to income ratio are going to start kind of not being able to get the same loans as people before, and it's just going to increase the problem, right? So affordability doesn't go up, it goes down with the shrinking of the tightening.
Yeah. Really,
Yeah.
really what, again, kind of putting this in an economics term, demand is a two-step function, right? You want to, but then you have to also be able to. And when
Hmm.
you see this tightening and Jerome Powell says it's going to act like a rate increase, it's the be able to. We're going to get less yes answers in my visual because of what is going on. And it could be a substantially tighter circle, certainly in the commercial market, where regional banks were a lion's share of the business, 50 to 60% of origination. They may be just flat out of the market for 90 days, 6 months. That's going to have an impact too, wouldn't it?
Yeah, absolutely. And I think even that's on the commercial side, but even on the residential side, if you're
Sure.
talking 1 to 4 homes, Like the banks, if you had a lot of money with the banks previously, then they were giving you terms on those 1 to 4 loans that were basically losing money, right? Because they wanted to
Yeah.
keep your deposits. Now, even more so, more and more clients are hitting me up because they don't want to actually keep all that money in the bank anymore. They want to spread it apart because, yes, FDIC insurance, yes, all of that's great, but the process to actually get it all back is very hard, right? It's not like you can go tomorrow and be like, oh, I want my 250 or $260,000 back, $270,000 back. It's not a blink of an eye. So, I see that kind of becoming more of a tightening bucket as well, where the banks are going to get tighter and tighter. They're going to ask for more deposits. They're going to try to take, hey, if you deposit $1 million, we'll give you this great loan. But I think people are going to start getting a little more skeptical about giving money to the banks because, I think I saw something on Yahoo Finance or something. Obviously, the best resource is like Bank of America was talking about. They still see a great recession coming in 23,
Yeah.
and that's kind of, it is what it is. But the market is starting to change in that sense.
Yeah. Yeah. One of the things that I strongly advise and why you come back every week is you have the ability to listen, right? A lot of One Rental at a Times fans reach out to you every week, every month. You're helping them, so thank you. But it's because you guys listen and ask questions, and you have, as a broker, multiple avenues. A lot of people just go to a big bank and it's like, hey, if you fit in this really tight circle, we'll say
Yeah.
yes. If you're not, we'll say not yet. And
Hmm.
I think a lot of people need to be working with brokers like Convoy Home Loans. How should they reach out? How do they get access to you and your partner, Dustin, to make sure the best of the best are helping them? How does that happen?
Yeah, go to convoyhomeloans.com and let us know you came from ORAT, and Dustin and I will reach out.
Awesome. Thanks, guys. And again, let them know
Yeah,
who came from
thank you.
ORAT. That's how you get Jonathan and or Dustin. Thanks, boss.